Hi guys, welcome to today's video. In today's video, we're going to be talking about the true nature of Forex market, right? We're going to be getting into the phases of the market conditions, how to identify the phases, and what to do once you've identified a certain phase, whether it's a continuation phase, a reversal phase, an impulsive phase, regardless, because I believe once you know these things, it will improve your trading career and it will improve your P&L and your equity curve. So yeah, without any waste of time, let's get straight to it. Right, like I said in the intro, the market moves in phases, right? So the market moves in two phases, actually. It all boils down to two phases. The first is the impulsive, the second is the corrective, right? So the market moves in impulses and corrections. Between those impulses and corrections, each correction will show you what direction the market is taking. So after each impulse, expect a correction in which is going to tell you whether we are going in the opposite direction, we are reversing or continuing. And then we have another impulse, we have another correction which will show you whether we are continuing or reversing, and we have another impulse which will show you again the designated or rather the trend. And then right after that we have a correction that will show you whether we are continuing or we are going to move in the opposite direction. So as you can see in this diagram here, we have an impulse, we have a correction, an impulse, correction, an impulse, a double bottom, a double top rather, which is a reversal pattern, and an impulse in the opposite direction, right? These are the two phases in which you must understand as a forex trader and as a price action trader. When it comes to approaching the market, you have to understand this. So let's go to the chart so we can have practical examples of what I'm talking about. Right, like I would always say in my previous videos, I prefer using recent examples, right? So as you can see here, we have a descending channel, a breakout which is impulsive right there, a breakout which is impulsive, a correction, we have an impulse, right? We have a large correction, we have a reversal, impulse, correction, impulse, correction, impulse, small correction, and one more impulse before we have a double bottom and we impulse in the opposite direction, right? So from this structure, we have an impulse, we have a correction. I said that each correction shows you whether or not we are continuing or we are reversing with the trend, right? So in this case, we have an impulse to the high and a flat continuation or a flag continuation that indicates that we're going to continue to the high, right? And as you can see, yes, it did continue to the high for about, I believe it's 200 and yes, oh, it's 190, it's 196 pips before building this larger correction here, right? This correction is a rising wedge. Now a rising wedge, the difference between the rising wedge and this, the rising wedge as a correction and this flag as a correction is that the rising wedge is a reversal correction, right? It indicates a reversal, a potential reversal. And as you can see, yes, the market did move impulsively to the low for about 90 pips, maybe 110 pips before correcting. And when it corrected, it showed us a flat continuation before impulsing to the low, another flag before impulsing to the low, a small flag correction before impulsing to the low, and then here we have a double bottom. It's not the clearest, it's not the most cleanest, but it is a double bottom, and the market did move in the opposite direction. This is what I mean by the market moves in impulses and corrections in different phases. It's always important as a trader to know which phase you are in so that you know what to do thereafter. Let's move on to the next example. On this example, we are on Aussie CAD and we have a large correction here. We have this large correction right here, and then we have a breakout, correction, impulse, correction, and a large impulse before the market reversed, give us an impulse, which is one of my reversal patterns that I go for. Reversal in the opposite direction, correction, impulse, correction, impulse, and we moved lower and lower and lower. So in this case, we have proof, right, that this works whether it's the lower time frame, the higher time frame, regardless, because even on the 4 hour we see here's the larger correction that we saw on the 1 hour, but before that we have an impulse right here. Let me highlight it. We have an impulse right here, a correction, an impulse, a correction, an impulse, and then now we are building a different structure, right? So it is always important for you to understand the fact that the market moves in impulses and corrections all the time. It moves in phases, those two phases. Keeping it that simple will improve your trading career drastically. So let's move on to the next segment. So like I said, the market moves in two phases, but we're going to talk more specifically about the corrections, right? So the market moves in impulsives, corrections, impulse, correction, impulse, correction, impulse, and then yeah, you know what to do. But there are different corrections for different impulses, right? So in this diagram, as you can see, we have an impulse, we have a correction, and we have a flag, a bullish flag, right, which is a continuation pattern, a continuation correction, if you may, right? And then we have an impulse, we have another correction, which is a continuation correction, which is named as the expanding triangle, right? And then we have a final impulse to the high, which is continued from the continuation pattern. And then we have a correction phase, right, which prints out a reversal pattern, which is a head and shoulder in this place, right, in this case. So here's the shoulder, here's the head, here's another shoulder, and the market moves in the opposite direction. It impulses to the opposite direction, right? So there is a difference between a correction phase for continuation and a correction phase for reversal. The moment you understand the difference between the two, your trading career will be much better than it is now. That I guarantee you. So let's move on to the chart patterns so we can break this down more practically. Right, I believe that Aussie CHF is the perfect example of where we can find different consolidations, different consolidations, different corrections, the different types of shapes and sizes of corrections that are continuing and, you know, reversing. So first and foremost, if we zoom in here, we are on the 1 hour chart. We see a descending channel, right? We see a descending channel, which is a reversal pattern, right? And at the bottom of the channel, we see a double bottom here. We have a first touch, second touch, impulse to the high, which is a fantastic confirmation that we are now moving in the opposite direction. And then we have a flag right? Just after the first impulse, we have a flag, we have another impulse, you know, the flag being a continuation pattern. So this one was a reversal pattern, an impulse, a reversal, a continuation pattern, impulse, another continuation pattern, which is an expanding triangle. It continues to the high, continues to impulse, we have another flag, and then finally when we reach the previous high, which is over here, when we reach the previous high, we start consolidating, and we present now a double top pattern, right? Which is fantastic due to the fact that it arches out, right? The second part, or the second leg, arches out and presents a nameable candlestick pattern, which is the high test, and then reverses you know, in an impulsive manner to the low, and then we experience another consolidation, which is a pennant or a rising wedge, whatever floats your boat, and then the market moves impulsively again. We have a final flag until the market then moves to this low. So as you may see, we have a large reversal pattern. We have 1, 2, 3 continuation patterns. We have another reversal pattern here, which is a consolidation pattern, and it reverses in the opposite direction. We have another continuation pattern and another continuation pattern to the low. So for you to further understand, you have to backtest this, and you will see, I guarantee you will see the fact that the market moves in impulses and corrections, and for each correction, every correction will tell you what direction we are going for, right? So like in this instance, this impulse told us that we are continuing, and this correction told us that we are continuing, this correction told us we are continuing, this correction indicated that we are. You may or may not have argued that this could be another continuation pattern, but either way, keeping in mind that the previous high is here, and we're experiencing a consolidation of sorts at the previous high, that would indicate to you, I wouldn't really, you know, enter for buys there, because we have exhausted this momentum here. In my opinion, we have exhausted the momentum of this. We have reached more than 90% of this reversal pattern here, and we are at the previous high, like the highest high, right? And we start consolidating at that high. So it's a huge indicator that the momentum is dying out. But even if you entered here, I wouldn't have blamed you. But this candlestick here, this candlestick alone, this candlestick here, if I had a buy position here, I would have exited now, immediately, on this candlestick pattern, because it shows that we are at a reversal point, and it prints out at the not only the previous high, but even at the latest high over here. It prints out at the latest high. So the high test prints out at the latest high, making it a double top. And then if you're not sure about that one, the next candlestick confirms it even further by printing out a bearish candlestick, and it closes bearish. So I would have exited here and went for sells, and I would have banked, let me see, if I held this one, I would have banked somewhere around 160 170 pips worth of profit. I believe now a light bulb is going off, and you're experiencing some clarity when it comes to your price action. But do not jump right straight into it. Please go back, backtest it, see it for yourself, take screenshots, familiarize yourself with the different type of patterns there are, reversal patterns, continuation patterns, and how and when to enter your positions thereof. So I have previously uploaded I've previously uploaded 2 or 3 videos pertaining to the kind of patterns there are, whether it's continuation or reversal patterns. I have a video on multi-touch confirmations, so if you want to check that out, please do check it out on the channel. Otherwise, if you did enjoy this video, please hit the like button, subscribe, hit the notification bell, share this with your friends and family, and inform someone who may need to know this. Other than that, thank you very much. I'll see you next time. Peace out.